Hello and welcome to another episode of the Student Loan Planner Podcast. It's Travis. Today we're going to talk about whether or not the IDR Recertification extension announcements can be trusted. So we're going to talk about what happened recently with the Trump administration pushing out recertification dates, in some cases to as late as 2027. We're going to talk about who can trust this, who cannot trust this, and what the heck is going on with the Department of Ed? Oops, I mean Small Business Administration. Oops, I mean Treasury Department. Oops, I'm going to explain what I even mean by saying that. So this will be a pretty jam-packed, quicker episode. Let's jump in and talk about it. So let's just try to recap some of the wild things that have come out of the White House the past few weeks. So the president said that he's going to be transitioning the entire student loan program to the Small Business Administration. There's no timeline. It seems like nobody's been briefed on this. It seems like there's no operational details that have been thought through here. And we're not even sure, and I'm pretty confident that it's not legal to do this. Why? The statute mentions the Secretary of Education shall operate the student loan program something like 34 times in the IDR statute and a similar number of times in the PSLF statute. So if you want to transfer a huge loan program from Department of Ed to the Small Business Administration, that is something that just, first of all, I don't think it's legal. Second of all, I don't even think it's possible because the SBA is scheduled to lay off a huge percentage of its staff. It did manage the, COVID relief programs. And, if you want to think back to that era, you could argue that that the SBA is responsible for more fraud of the American taxpayer than any other agency in history. If you think about how the PPP program was run, if you think about how a lot of the EDIL or EIDL loans, Economic Disaster Loan Program, whatever the acronym was, right? I mean, people were getting loans for, LLCs like Free Ferrari LLC and like just absolutely wild, fraudulent applications that bilked the taxpayer. I think I read one report that it's like at least $100 billion or something like that. So you want to take loans out of the Department of Ed and transfer them to an agency that's got, at best, a mixed track record of managing, complex loan programs. Now, the SBA manages the SBA loan program okay, but that's because it's pretty straightforward. It's a loan repayment program. There's no call centers. There's no directions to make to, a bunch of federal student aid contractors, right? The SBA doesn't manage the FAFSA process. You'd have to have a lot of staff, a lot of new staff at SBA to be able to handle the loan program. Could they do it? I don't know. Maybe if Congress funds it or something or explicitly says to move it over there, maybe they move it over temporarily as part of a budget reconciliation bill. It's hard to know. But this kind of, frankly, feels a lot more like the president trying to fulfill a campaign pledge of, abolishing Department of Ed. And to fully abolish it, you have to get all of the key functions out of it, right? So I would say that if you're a hardcore supporter of the president, you're probably in favor of this really intense shutdown of Department of Ed. And you have to put the loan program somewhere. And they supposedly, I think, thought about doing it in the Treasury Department. That was the initial plan, that the Heritage Foundation and that Project 2025 document outlined, was that it would go to the Department of the Treasury because that is obviously an organization that is very familiar with a lot of sensitive, payments and repayment data. But for whatever reason, they said, let's do SBA instead. And I'm not exactly clear as to why, but that's what they've said. But we haven't seen any movement yet. The president said it was going to move over. We haven't had anything actually happen yet. So we have to kind of pay attention and see, is that actually going to occur? Or was this sort of just a bunch of loose talk, right? And I think it's probably more the latter. Now, what about the IDR recertification extension announcement? So this one floored me. This was shocking to me when it was announced that the Trump White House ordered its own education department to instruct all of the servicers to extend borrowers' recertification dates to no sooner than February 2026. Now, let's think about that for a moment, because this is the most liberal action or progressive action that the Trump White House has done, I think, period, so far in the second administration. And what do I mean by that? Well, it's no secret that the Biden administration just kept pushing and pushing and pushing IDR recertification dates frankly, because they did not want people's payments to go way up right before an election, or perhaps that was the way they viewed that they could push off people having to make payments that would almost be a backdoor way of canceling student debt. So there was like a very honest ideological reason why the Biden administration didn't want to have an IDR recertification, and there was a political reason too. And there was also probably, to be fair, an operational reason. The servicers are not well set up to recertify people's payments when the formulas that the last administration came up with were so complicated. Now, for the Trump administration, what they are doing by pushing off recertification dates is costing the Treasury Department a ton of revenue. And I guess technically it's costing the government, not the Treasury Department, but it's costing the government a ton of revenue, because what you're doing is saying, if somebody's got the pay-as-you-earn plan, if they've got some IDR repayment plan with a $0 payment or a low payment that would be much higher if the recertifications were actually due, those recertification dates getting pushed off means that the government is not getting all of those payments, and people are still getting forgiveness credit in some cases. Now, for people in the SAVE plan forbearance, you're obviously not getting forgiveness credit. But in the SAVE forbearance, you are getting an interest subsidy until that ends. And that is literally, at least by my calculations, at least $1 billion a month in costs, which for the government is no big deal, because that's a pretty small amount of money in the grand scheme of the federal government. But you've got about 8 or 9 million borrowers on the SAVE forbearance. The student loan pause was costing about $5 billion a month, and there's about 40-something million borrowers. So if you do the math, it's reasonable to assume that the cost of the SAVE plan forbearance and just the interest subsidy part is somewhere in the neighborhood of $1 billion a month. And by extending that IDR recertification date, that probably costs, my guess would be at least $1 billion of additional money, because so many people have not recertified in a long time for their IDR repayment. Now, why can you not trust this announcement? So I did say this is the most progressive / liberal thing the Trump administration has done in the second term, is it announced an IDR recertification announcement extension, I guess, of people's IDR dates. But at the same time, this administration is still, a Republican conservative Trump second administration. And so what is going to happen, I think, is when you do see all these court cases finally get decided, and the SAVE plan is finally and once and for all said to be kaput, then you've got 8 or 9 million borrowers, which is like a huge number of borrowers in active repayment. Because if you look at the data, something like, I think off the top of my head, I think it's like a half of borrowers are in some sort of forbearance or default or deferment status. So if you think about 8 or 9 million people in the SAVE plan forbearance, that's basically half of all borrowers in some kind of repayment. And so if you suddenly tell 8 or 9 million people, hey, sorry, you have to get off of this plan and get onto another plan, that's going to be extremely chaotic, and it's also going to have a lot of implications of when people actually have to apply for a different plan, what will happen when they go apply for that different plan. So as an example, again, off the top of my head, back when Repay was still around, you had about 3 million borrowers on IBR, about 3 million on Repay, and about, I think, 1 to 1.5 million on Pay. And overall, there was something like 8 million borrowers on an IDR plan of some sort. Maybe only 100,000 or 200,000 on ICR, for example. So if you have 3 million people get kicked off a plan, well, that's a big impact, but it's not quite, catastrophic, you might say. But having 8 or 9 million people all at once kicked off of an interest-free $0 payment and a 0% interest rate, to have all those people ejected from that at once, this is not going to come from the White House. I think this is going to come from the courts, because I think that the courts are going to say everybody's got to get off of the SAVE plan because it's illegal. And then the question is do they also find that the Pay plan is illegal? I don't think that they would find it illegal for being on it. I think they would find it illegal for getting 20-year forgiveness on Pay. I actually think that the Pay program might even stick around, and you might even still be able to use it to get PSLF. But for the 20-year forgiveness on Pay, that could easily become a casualty of the SAVE plan lawsuits. And if it does, then you could have everybody on SAVE and Pay be asked to switch plans. And the only statutory plan in this case, in this hypothetical scenario, would be IBR. Everybody's got to get off of these other older plans. Now, if you have to go get onto IBR, how do you do that? The government can't just force you onto it. They would probably have to force everybody onto the standard plan. Well, that will freak people out because the standard plan payments are going to be very large. And the reason they're very large is if you have not consolidated your loans, then the standard plan formula is based on a 10-year amortization for the amount of time you have left in repayment. So that if you've already been having your COVID forbearance count for a few years of credit, that means that most people's standard repayment amount for non-consolidated loans will be something like 2 to 3% of their whole loan amount per month. I mean, it's going to be shockingly high. So in other words, if you started IBR in like 2019 and you got 5-ish years of credit during COVID, and you've got 4 or 5 years left to go if you're on a 10-year PSLF kind of plan. Well, if you were kicked out of the save forbearance, you were told to pay under the standard plan. If you have 100,000 of loans, you might be asked to pay 2,000 to 3,000 a month. And that's because of this very odd reading of the statute that says that you have to amortize the standard plan over the length of time you have left over a 10-year repayment schedule, 10 years minus the amount of years you've already gotten credit for repayment history. So the reality is, in our survey, is about 60% of everybody in our community is on the save plan forbearance, which means a majority of student loan planner listeners and readers and clients would get pushed off of the save plan forbearance onto the IBR plan and would be forced to recertify with their most recent available taxable income much sooner than anticipated. So for the pay folks out there, your certification extension could be in question. It's a little bit less sure, though, than the save plan forbearance people that will almost definitely be asked to recertify much earlier than anticipated. The pay plan people are more like a big question mark about whether or not they'll ask you to recertify or not before, this 2026 or 2027 date they're throwing out there. The people on IBR, though, and I don't mean IBR generally, I mean the specific IBR repayment plan, those folks are actually the safest. And the reason that they're the safest is because IBR is statutory, and this extension of IDR recertification dates theoretically would not impact those folks. So if you were on the IBR plan, new or old, and you got a extension on your IDR recertification date to, summer of 2026 or something like that, it is probable that you could believe that. And so if you were on the IBR plan specifically, you might need to reflect on when and how you amend a prior year married filing separate tax status to joint to get money refunded to you. Because that is an option on the 1040X. You could amend from separate to joint and get all money back that you paid extra in taxes to file separately instead of jointly. You can get that money back as a refund. Now, should you do that if you're on the IBR plan with the 2026 recertification? I probably wouldn't do it right away, because even in the summer of 2026, theoretically, you could still use your 2024 tax return. Why? Because you could file for an extension for your 2025 tax return and then still have your 2024 tax return available for married filing separately if you needed it. So this is just to show you how, even though they've announced all these very, very generous IDR recertification policies, unexpectedly, I'll add, you should not jump straight into thinking, oh, great, I can file joint. Oh, great, I can not file an extension on my taxes. Oh, great, I can ignore my student loans until next year. That is almost certainly not going to be the case because of the courts and because of how this administration is going to react to the courts. If the courts make a very conservative ruling, this administration is not going to challenge this in some, friendly jurisdiction or something like that. You'll see some progressive groups, consumer advocate groups probably try to bring lawsuits in strategic jurisdictions to try to get some sort of, protections for borrowers in any which way they can. But probably that's not going to happen. I think probably you're going to see a very conservative ruling either from the Eastern District of Missouri or from the 8th Circuit Court of Appeals, and then the administration will simply choose to not appeal it to the Supreme Court, which the old administration, or if, Kamala Harris had won her administration, they would have appealed it to the Supreme Court. And you might say, that's not going to change the ruling at all. I would say actually it might be a little bit more moderate than it would be coming out of the 8th Circuit, because of the 8th Circuit being a more stacked, sort of appeals court with more Republican appointed judges than the Supreme Court is. So I think that what we have to do is just be patient, be protective of our finances by being careful with how we file our tax status, separate or jointly, whether or not we do an extension of our taxes, or not. I think that the safest thing to do, is just file separate if you're married in an extension. It's not one size fits all, though. A lot of it depends on your individual circumstances. But what we can rest easy with is that PSLF is not gone yet. IBR is not gone yet. A lot of folks are feeling a lot of stress right now. Folks are feeling a lot of stress about their personal finances, right? I know people literally in my neighborhood that have lost their jobs over a lot of the federal layoffs, right? So folks have a lot of uncertainty. And a lot of times what happens when people have uncertainty in finances is you let it affect your life more than you have to let it affect your life. Certainly if you or someone you love is affected by sort of the layoffs, obviously we feel for those folks, or we feel for you if you're directly impacted. And I'm not saying that you shouldn't feel any kind of way about it, but I think it's kind of healthy right now with how much stress is out there, how much is going on with student loans, and just more broadly, to just take a deep breath and say, what can I control? What am I going to allow affect me psychologically? In other words, setting healthy boundaries, maybe deciding to check our podcast out a little less frequently unless the headline is really that good. Maybe deciding to open your email a little bit less. Maybe going for a walk outside and, not necessarily looking at your phone quite as much while you go on that walk. In other words, what I care about is your psychological health, your financial health. If you're listening to this, you're kind of already breaking some of my rules. So, well, I don't know. Thank you for listening to us anyway. But the goal is wellness. The goal is psychological wellness, low anxiety, managing stress. That's key. That is key because this is the long game with student loans for some people. 10 years for PSLF, 20 to 25 years if you're going for the long-term forgiveness. Or even if you're paying back your loans, it's still a non-zero amount of time. You're still paying them back over the course of, a few years, probably, if you're paying back a six-figure balance. And I would argue, frankly, that if you try to pay it back in 1 or 2 years, then you might be depriving yourself of experiences in your life that you deserve, and you don't have to follow this one-size-fits-all advice of, quote-unquote, living like a resident. Well, I'm going to push back kind of hard on that because I think that in life, time is very precious. And if you look at things statistically, most physicians are not going to retire. And this is just, I'm not talking about just physicians, by the way. Most any professional is not going to retire the day they reach financial independence. Why? It's because you didn't get into what you want to do probably because of the money. You got into it because it probably fulfilled a sense of calling or a sense of purpose, or you found it interesting, or you enjoy being able to help people. And there are times when you're exhausted, you're stressed out, you're tired, you wish that you had chosen a different career field. That happens to pretty much everybody, at least at one point. And so what I find is helpful is managing your stress by self-care, taking nice vacations, having a balance in life between your savings and your spending, having a good long-term plan for goals, life goals you want to achieve, things you want to achieve together if you're in a relationship, things you want to achieve for your kids if you have children. So all these things are really important, and it's a marathon. It's not a sprint. And a lot of the advice that tells you to sprint can exhaust you, both psychologically and emotionally, and we don't want that. We want you to be able to handle the long term, handle the ups and downs, not just of the market, but also of the news cycle and also of different administrations, some of which you'll agree with more politically than others, and some of which you'll really disagree with, And so, thinking about all the student loan chaos during this time, let's just take a deep breath. Let's just know that what's being told to us publicly with IDR recertification announcements cannot fully be trusted, and you have to be ready to recertify at any time, particularly if you're a PSLF borrower or you're on the IBR, if you're on the Safe Plan Forbearance needing to switch to IBR, or you're on, pay. Any one of those scenarios, be ready to recertify with a very fresh tax return. And now that you know that, you don't have to worry about it because you'll be prepared. And most people, what we're seeing right now from the default rate, the delinquency rate on their student loans, not most, I guess, but a huge, minority of a very large minority of borrowers have effectively taken their student loans and put it in the back burner and not thought about it for years. because they have not had to worry about it. They have not had to think about it. And the delinquency and default rate is already on the high side of what normal is. Normal is like 13%. I think I read a stat recently that it's like 16 or something. And that's before they turn off the save plan forbearance. So when that save plan forbearance gets turned off and people have non-zero interest, non-zero payments, that default and delinquency rate is going to go way up. And what I hope for you is that doesn't impact you and your family because you have a plan. And, should policy overall be different to help people more in student loans? That's not my job. I'm not a policymaker. My job is to try to remove stress from you. Try to lift you up, encourage you, help you bat down all the negativity, all of the stress that you're going through. Again, listening to a student loan podcast when you could be listening to true crime. So, the goal here is to make you feel happy, lightened up, having a happier mood with your week. And just know if you're going through some emotions or struggles or frustrations or stresses, those are very valid feelings. You're definitely going to feel much better, though, long term when those loans are gone. But that's a journey. It could take a long time. So we have to not let the stress impact your day-to-day while we show you the loopholes and hacks and tools that you need to handle the mental burden of student loan debt. Because of your education and your skill level, you can absolutely achieve most all of what you want to achieve in life. You just have to be patient. You have to have that long game marathon kind of attitude. So hopefully that was kind of encouraging to somebody. That's why I said it. So if you're feeling anxious, just, promise me that you'll get outside and go on a walk and just try to, look at something really weird or funny or unrelated to your job just to de-stress. Like, for example, I showed my wife, who's a researcher applying for a bunch of grants that are very uncertain right now. I showed her this funny story about something called a torpedo bat that the Yankees used an MIT physicist to invent that puts all the mass in the spot where batters are most likely to make contact. And they had 9 home runs in a game. And now everybody's like, the Yankees are cheaters, whatever. And so everybody's mad about it, but the Yankee fans are thrilled, right? So those are the kind of distractions that we need when something like student loans is constantly in the headlines and it's constantly changing. And it's constantly causing stress, right? So go find your torpedo bat to distract yourself right now. And if you want to ask a serious question about your student loans, we'd love to help. Just go to studentloanplanner.com/voicemail to ask whatever is on your mind currently in regards to the student loan program. Have a great rest of your week. Thank you for listening to the Student Loan Planner podcast. Are you on the free Student Loan Planner email list? If yes, you could upgrade your experience and discover student loan loopholes so good they might get repealed if I talk about them publicly. Find out my very best thought leadership that I really just can't be super open about anymore, unfortunately. If you want to get our very best tips, not just the ones that I can share for free, then go to studentloanplanner.com/insider to get a special discount for your year membership. That's studentloanplanner.com/insider and get our very best dozens of bonus content and tips that's going to save you money and get you out of student debt faster. And if you're already an SLP insider, please reply back to those emails and let me know how I can make it even more valuable.